Hey everyone, Ben here. A question I always get asked is, where will the next technological battle take place? Well, the answer is in the skies. Now, I previously did a video on EHang, a very interesting and exciting stock right now in the autonomous aerial vehicle space. So these have created this life-size drone which people can actually sit inside. It can be used for logistics, it can be used for firefighting, it can be used for tourism. Very interesting company. The issue is the valuation for this company is extremely high, but still a very interesting company to check out. I'll leave a link for that in the description below. But in this video, I'm going to discuss another very interesting company. This company has been called the Uber of the skies, and they're going public via a SPAC merger. But that's not all that's interesting about this company. ARK Invest in Cathie, who is widely known as the original Tesla bull, as she predicted Tesla's monstrous bull run, has also recently invested into this stock. We're diving into the live trades here from ARK Invest. I've got the trades here from the 29th of January, so very recently. And as you can see here in the ARK Q fund, there was a buy order for Experience Investment Corp. Now, this is the SPAC company, which this company I'm going to talk about in this video is merging with. So the ticker symbol for that is EXPC, but we're going to get into more details in a second. But that's not all that's special about this company. Another famous and very popular investor right now, Chamath, who was a former Facebook executive turned venture capitalist, has also invested into this company. So this could be a very interesting play on the next stage of technological advancement. But before we dive into that, if you're new around here, why not consider joining the investing family by hitting that subscribe button and turning that notification bell on. If you do find any value in this video at all, please give this video a big thumbs up. That helps out tremendously with the YouTube AI. If you want to take things one step further and get access to exactly which stocks I'm buying, which stocks I'm selling, exactly when I'm buying and selling stocks before they run up massively, then feel free to check out that first link in the description below for the VIP membership group. You also get access to my entire investment portfolio, and you can talk to me directly about your own investing decisions. But with that being said, let's dive in. So what is this company? Well, the company is called Blade, and they specialize in urban air mobility. Specifically, they use helicopters to ferry people from different parts of congested cities to airports in order to avoid traffic.
Run! Go! Get to the chopper!
So Blade is to become publicly listed on the NASDAQ through a business combination with Experience Investment Corp on the NASDAQ EXPC. The transaction is expected to close in the first half of 2021. They have a first mover advantage and loyal customer base, recognized and valuable urban air mobility brand, strategic infrastructure, large addressable and serviceable markets, number one market share. Now, this is key in the air mobility space, and that could be a real advantage for this company. Major investor, apart from Cathie, Chamath. We've also got Airbus here, strategic investors, so these guys are investing into the company. You've got the helicopter operators here. They own the aircraft, they own the hangars, they have the mechanics, the pilots, the training, but they don't have the marketing, the customer service, the technology, the customer experience staff. And that's where Blade comes in. So they really provide this whole experience and whole lifestyle with using the platform. So I'll dive into that a little bit deeper now. Great advantage of the company is if they don't fly, they don't pay. So they don't have to pay for these aircraft, the maintenance, the setup, if they don't actually fly and use the vehicles, which is great to see. So here's a few examples. So they do short distance. So people want to travel from Manhattan to Long Island, short distance helicopter flights. Blade Airport, so from Manhattan to all the different airports, JFK, etc. Medi Mobility. Now, this is actually a really interesting sort of side business for the company. So this is rapid organ movements for human transport. So these are actually the largest provider of transportation for human organs. So of course, if you need to get some human organs from one side of a congested city to another, you're best to call Blade.
Looks like our friend has been blood running, huh?
Newborn clinic. I know this place. It's a blood bank.
Owned by vampires, and there's one in every city. And they always deliver.
So they've got international joint ventures with Blade India, so that's also a very popular platform. Of course, we know India is an extremely congested country. So revenue is still quite small. So this is a small company, just $33 million in revenue in 2019, and they have 10 scheduled routes. By 2024, the company is expected to bring in $400 million of revenue. So that's greater than a 10x on the revenue this company is expecting. They hope to have 28 scheduled routes by that point. Very interesting sort of growth plan for this business. This is a true growth company right now. This is the problem, and this is what this company is solving. Global traffic congestion is a problem and getting worse. So there's been a 45 to 65% increase in commute during rush hour, 26 to 40% total drive time stuck in traffic, and the average car speed has dropped due to, of course, all the traffic. Dubai's even worse. There's been a 95% increase in commute time. Tokyo is also about a 65% increase in commute time. And if you've ever been stuck in a traffic jam, you know it can be absolutely soul-destroying.
Try to step on it just a little bit for me.
Here.
I know it is.
Jesus, look at this schmohawk over here.
So Blade reduces travel time and anxiety at prices less than comparable to alternatives. So this is a case study these guys did here. So they looked at driving, they looked at the Amtrak, and they looked at Blade, and of course Blade was a lot faster. $795 airport pass. To me, that seems really cheap. $95 to use a helicopter to get from wherever you are in, say, New York City to the airport. That's not too bad. So this company has done some surveys with their serviceable addressable market, and they said flyers would pay $195 for a helicopter service. So that's some sort of survey they've done on the cost of flights there. Why this company is being called the Uber of the skies, because you get this customer-facing app. You can simply log on, click, book a flight. So this is what's really interesting about this company, because it is really a marketing and branding business. You've got a downtown LA rooftop lounge, so people that use the Blade services, they go chill out here on the rooftop before they catch their helicopter to the airport. They've got a lounge in Miami, Nantucket, India, so all over really. So this is very interesting. Blade has held the #1 market share in New York City area by the seat helicopter market since 2015. So they're the #1 market leader, which is great to see. We always want to be investing into the market leader in industries. Blade does not own any aircraft. Now, this is a clear distinction we need to make with this company. And I think this is actually a good thing, because the issue I saw with Blade originally, I thought, okay, these guys are the Uber of helicopter flights. But what if they get disrupted by these human-sized flying drones, which companies like EHang are making? Then they have all these helicopters which they don't use, so they'd have to sell the helicopter, also maintain the helicopters, the upkeep of the helicopters, etc. But as it doesn't own any aircraft, this means it's an asset-light business model. They only pay for the aircraft as these aircraft get booked, so that's great to see. But this is the really interesting part. So you've got eVTOL. So this is Blade's catalyst for growth in urban air mobility. So I think this could be really interesting. So this is an electric vertical takeoff and landing aircraft. Very interesting, piloted, quiet, safe, zero emissions, lower cost of manufacturing maintenance. Now this could be extremely interesting. I do recall Elon Musk on a previous interview saying, what business would you be in if you weren't in the electric vehicle industry? And he basically said he'd work on creating an electric aircraft. So very similar in some ways to EHang. This is created by Boeing, I believe, as I can see here, into eVTOL aircraft over 5 years. So this is the real growing market, these eVTOL aircraft, these electrical vertical takeoff and landing vehicles. So you've got Boeing's version, we've got Bell here. So this is very similar to the Uber aircraft, which they've actually sold that part of their company right now. But this company has an alliance with Blade, so that could be very interesting. That's a Blade partner. Blade investor and partner, Airbus, leader in aircraft. So they're a lead investor in Blade Series B round. So of course, if they create an electric vertical takeoff and landing vehicle, Blade will be the company they partner with in order to use that vehicle. Joby Aviation, I actually discussed these guys in a previous video regarding the competition for EHang. And then there's also a Volocopter, so that's a very interesting looking. So that's passenger flights in Singapore and Dubai. That also looks very intriguing. So regulatory officials are focused on eVTOL certification. So EHang's already registered in China. They're actually running flights right now in China. They're partnered with, I believe, DHL on a package delivery service. They've got a trial permit for flights in Europe. So it's very interesting so far. But the US always wants to be one step ahead of China. So if China's already miles ahead, so I believe that will really motivate the US regulatory officials. So Blade's existing platform provides the expertise, scale, and customer trust to transition to eVTOL. So that's the sort of unique part of this company. So it's a whole brand. I really think Uber should have just bought this company. I don't know why they didn't actually buy this company. It seems interesting. It says brands partner with Blade. So they partnered with Uber, but I feel like Uber should have just invested into this company, or maybe Tesla should in the future. They're partnered with obviously all the high-end beverages, you've got Grey Goose here, all that sort of high-end vehicles, Porsche, Maserati, Mercedes. Once you see one of their promotional videos, once you see them on the news, the stock tends to fly in the short term, mainly from retail investors. So that could be a good short-term catalyst for stocks like this. And that's why I'll get into the valuation later in this video, and EHang's valuation, which is unbelievably high right now. So this is the passenger growth. So the company has been growing its passengers. They went from 1,000 passengers back in 2014 to over 37,000 by 2019. Revenue. So this is a major risk for this company, and I do want to get into this. The revenue was, of course, hit by the global issue, which shut down a lot of travel, because who needs a helicopter to go to the airport when there are no flights? So that's a major issue, and I do think that is the biggest issue facing this company. The travel industry is on its knees right now. So obviously we're expecting that to recover in the future, but still these things take time. And I see that as a real issue with the company, but at least the company doesn't own any helicopters, so they've not got all this inventory to maintain, etc. So they've had a positive gross margin in all years. They have a fixed hourly rate, which is paid to the operators, the pilots, for the fuel, the maintenance, and Blade only pays when we fly. I think that's a key part of this business, which actually key advantage of this business. Now, revenues were up 61% year over year, as they've stated here, which is high growth, but one thing you guys do need to be aware of, so smaller companies can grow their revenues much, much faster, much, much easier. So $25 million, that's a small number, really. They're expecting some massive growth, 85 million by 2022, 181 million 2023, $400 million by 2024. Okay, so let's go on to the transaction details. Pleasantly surprised again. So this company went public, $10 share price. They had $375 million in cash. Enterprise value, just $450 million. So this is a small cap company. However, SPAC shareholders do get 33% of the final company. So generally, I analyze a lot of the SPACs on this channel. You're looking at the person, the retail investor like you and me who invest into the SPAC. We're only getting about 7%, 10% of the final company. In this case, you get 33%, so that's actually a positive for the company. So I've looked at the current share price, $14 per share, which gives us an approximate $500 million market cap of the SPAC right now. That gives a total market cap of approximately 1.5 billion. So this is the valuation of the company right now. Still must be said, that is a small company. That is a tiny company. So this definitely could be one which could 10x in the future. And it's not often I do say that. I know it's quite a common phrase to throw around these days. This company can 10x, that company can 10x. But really, it depends on two things: growth and the company's size. So if a company is giant like Amazon, no chance it cannot 10x from where it is today. Not that Amazon isn't a great company. I think Amazon is a fantastic company, but just due to the company's size, I did a video on this. It was called How Big Can Amazon Grow? And basically, the company will be worth half of the GDP of the USA. So looking at the 2021's revenue, just $52 million. So the further we go out into the future, the more risk we have as investors when we're investing into this company. So price of sales, 28, looking at 2021's revenue. That's very high. But if we compare that to EHang, 128 price of sales. So compared to EHang, it's actually not too bad. Now EHang is in China. They've been less affected by this whole global issue. Price of sales 2023, 8. That's quite good actually. By 2024, if this company can reach its projections of $400 million from around $50 million today, then a price sales of 3.75 is what you're paying today. So that's actually very good. So really, that's the risk you're taking with this company. Okay, so now let's dive into the risks of this company. What could stop this company achieving this 10x growth in the revenues, which this company is predicting? The first I see is this major travel lockdown, which we're currently experiencing right now. So how long this will go on for, nobody knows. It could be 6 months, it could be 1 year, it could be 2 years. The second major issue I do see with this company is people are now transitioned a lot more to working from home. So will they be flying less for business and thus using Blade's transport less? And also, will they be commuting less and thus reducing the traffic in that way? And thus there won't be as much of a need and as much of a problem for Blade services. Third risk I can see is Blade's niche client base. So a lot of Blade's clients could be very wealthy individuals that use their service. They like the whole lounge, they like the atmosphere, they like to pay for a helicopter service rather than just taking the subway or taking a taxi or taking the Amtrak or wherever else it may be. Final risk, which I did see, which could be a potential headwind on this stock, is safety. Now, this company did state in its presentation it has an extremely good safety record. I believe it's one accident every 100,000 flights, I believe. But the issue with anything like this, especially if it's in the skies, is if they have one crash, it will be publicized all over the news, which is really bad for the brand. You could have people canceling flights. You could have so many issues. And I do see that as a major issue. This is why I didn't personally invest into Virgin Galactic, because I think it's a great company. But if they have one crash, that's it. The stock's going to get absolutely hammered. So you've got a lot of tailwinds behind this company. It is a growing market, this air mobility space. And you've also got these headwinds. So really, you've got to balance the risk reward if you decide on investing into this company. This company is definitely one to watch and maybe even invest into. Okay, so if you guys did find any value in this video at all, even just a little bit of value, please feel free to give this video a big thumbs up. That helps out tremendously with the YouTube AI. If you're new around here and you still haven't subscribed, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. If you do want to know exactly which stocks I'm buying, which stocks I'm selling, exactly when I'm buying and selling stocks, and access my entire six-figure investment portfolio, then check out that first link in the description below for the VIP membership group. You can also talk to me directly about your own life goals, your own investing goals, and your own life situation. With that being said, I hope you guys have an incredible day, and I'll see you in my next video. Invest safe.